And joining us now to share his commentary on the day's market performance is Shange from Money Mondays. Omega, thanks so much for your time this afternoon. Now, let's start off by reflecting on the trading week that was. Geopolitical tensions at the center of it all, but we've also seen moves from central banks, the Fed, BOE, and the People's Bank of China standing pat on rates. What did you make of the week that was?
Well, it's been quite a lot of upheaval during this week, especially with the politics that's been occurring, well, geopolitical activity that's been occurring. Usually when you have a lot of central banks, obviously making rates decisions, that would generally be the focus of the market. But because of this geopolitical activity that's been occurring, that's been quite a distraction. Very fascinating, compared to the start of the year where tariffs were the big story. Now we are looking at conflicts being, again, another story that the global market has to face, just like previously a couple of years ago with Russia and Ukraine.
I've been saying this all week, I think since the beginning of last week, that I'm so happy that for once we are not talking about Trump and his tariffs and focus is elsewhere. Now, I just want your insights on the Bank of China. Their rates move was expected, keeping rates on hold, especially after that truce between Washington and Beijing, providing some sort of comfort when it comes to the growth picture in China. Do you expect to see more stimulus, right, but targeted at consumption?
Yeah, so China obviously for a while has been trying to move their economy from just not only being an export economy, but by being a consumer an economy that's also based on the consumption of goods within their markets. Unfortunately, the Chinese consumer is very, I wouldn't say cash strapped because people in China do have cash, but they are major savers. They love saving money and they don't really consume that much. But the Chinese government obviously has a strong intent to just get the economy stimulated and get people actually spending money and get get it easier for people to spend money by keeping rates a certain level. So we actually expect to see interest rates in China actually decrease slightly a little bit, especially if there's ease in terms of the tariffs and Chinese economy obviously doesn't take a massive hit as expected from the tariffs. But again, with the geopolitics that's been happening, we can't really predict the future very well. Beijing might actually respond differently in terms of how they treat the economy, just to insulate it away from any upheaval within the global markets.
And with those geopolitical issues, we've seen the oil price, take center stage as well. And we've also been seeing a lot of investors flee for safety, and that, of course, boosting the gold price. We've seen, as I said, that flee for safety amid Middle East tensions. However, when we're looking at the gold price on a weekly basis, those prices are on track for a decline. Are we just at a point where, the rally in prices is hitting a wall, or will we see that gold price hit more record highs? I mean, when you look at it on a year-on-year basis, it's still up, I think, by 30%, I'm not 100% sure. Just on the weekly basis, we are seeing a bit of a pullback.
Yeah, so I think with gold, traditionally this week, we would have been asking ourselves, what has the Fed decided in regards to interest rates? Obviously now comparing gold to the dollar. But at the moment, investors are looking at risk scenarios, especially with the geopolitics that has been, geopolitical activity that's been occurring. So it's a risk on, risk off question. Right now, obviously, gold is in a steady weekly decline, but not necessarily retracing back to lower levels. From my perspective, I see gold rising, especially as geopolitical activity potentially heats up. People are going to look for safety and they're going to run to gold because that's been one place where historically people have run to whenever they're worried about the global economy. So the story of gold right now is the story of geopolitics. And at some point, it's going to be, again, the story of the dollar and its strength or its weakness.
And, with this flee for safety and that really pushing gold prices higher, where are you seeing investors also hiding for safety, just besides the gold counters or Kruger Rands, for example?
Well, in terms of running away for safety around the world, it's been a very tough question because historically, not even historically, a few months ago, the question was, where do you run away for safety in regards to the tariffs? Now the question is, where do you run away for safety in regards to the geopolitics? And it seems like property actually might be the opportunity because it's the one commodity that generally is not exported, so you can't really put a
Yeah.
tariff on property. And so maybe that's where safety might actually be right now.
Ah, interesting. Let's move over to some company news. Gemfields making progress with one of its plants. That expansion plan set to be complete this year, with the plant set to produce its first rubies in August. What did you make of that move, Omega?
Well, it's obviously a good thing to hear that a plant is almost due for completion at 95%. But obviously, the emerald markets
Yeah.
has been a tough market. It's not easy, and Gemfields operates in countries that are, I wouldn't say hostile, but are very difficult to operate in. So it's a good thing to hear that they've actually had some development there, but we're not expecting any good news going forward. It's a very tough market, and odds are Gemfields' stock price will receive the news very well, but over the long term, they're still going to be probably struggling, especially because they're not back to full operational capacity just yet.
All right. So then Capital Appreciation expecting to report a double-digit increase in earnings, pointing to a strong showing from its payments and software divisions. Is this a company you follow? I know it is one of the smaller cap players on the JSE.
Yeah, it's not one of the companies that I necessarily follow, but anything that has software and has payments has traditionally just been doing well over the last couple of years. So it would definitely be something I research further, especially when you hear the word software and payments.
Yes.
We've seen around the world companies that are in that space. They tend to do very well, especially when they enter the right markets. So definitely something to look out for. Maybe it's going to grow and become a large cap stock in the next couple of years.
All right, let's hit pause on the conversation, Omega. Before we move on to your stock pick, let's take a moment to touch on what your industry peers are finding interesting.
It's not a huge value proposition at the moment. I think it's fairly valued. The results were brilliant. I mean, 100% increase in dividend is good news as far as I'm concerned. They are little debt. They focus on the right end of the market where it's higher income overseas visitors. The prices go nowhere for about a year. So again, valuation is not demanding. So what I'm looking for is being the best player in one of the best sectors locally, which is tourism.
Absolutely, I think it does look expensive on paper, but I think it is worth the premium if one looks at how it's executed on the non-banking elements, and they now have a new wave where they move into business banking, and I think that could be another leg up for them. So I think, yes, they look expensive relative to the peers, but they certainly have a good book that is conservatively accounted for. I think impairments should improve from this level onwards as we see rate cuts coming through.
So like going with Capit and Rickers picking Southern Sun. Just your analysis on those counters, Omega.
Yeah, so Capitec, good stock. Everybody wishes they had invested in Capitec many, many years ago.
Yeah.
And odds are they're going to continue to grow very well. They've got a very strong balance sheets. They obviously got a very good customer base. They're expanding into different areas as a business, especially when you're looking at the business banking. They're looking at making acquisitions. So it's a stock I definitely have. Now, in terms of the second pick, definitely also a very good one to go for. Not necessarily my cup of tea in terms of the risk profile of the actual company, but definitely something I would look into adding my portfolio just to diversify it a bit.
I must admit, I'm one of the people that are really regretting not investing in Capitec. I think I do find comfort in the fact that, listen, I find comfort in the fact that I was too young, and that's what I'm going to stick with. All right, where are you seeing value at the moment? What's your stock pick?
So my stock pick today is Palantir Technologies, and this obviously is spurred on slightly by the geopolitical activity, but that has been happening. For those who don't know, Palantir obviously is involved in the space of government, enterprise, and data collection and analysis. And for a long time, they were a secret defense contractor in the United States, meaning they provide technology to obviously go into conflict scenarios. But one of the key things about Palantir is the artificial intelligence division that is actually growing and doing very well. And when you add government having a lot of interest in managing their militaries and managing defense spending and obviously analyzing competitors around the world, then Palantir becomes a very good stock to actually choose and pick in your basket, especially if geopolitical activity continues to heat up for the next couple of months. This should be a stock that we see performing very well. They've reported amazing earnings in the first quarter, and we should see that growth continue.
All right, Omega, thanks so much for your time and sharing your insights on trade at midday. That was Omega Shange from Money Mondays.